So another example of entry and flow. Flow is going to be how orders are delivered. So when we talk about orders and delivery, delivery is how are we reacting to a linear line, right? So a linear line. This time we'll go with the idea of using sessions. There's going to be a London session, and then we'll get a New York session, which we'll draw with our black pen marker. All right, so London will give us some levels to work with. All right, so this is what London's given us right now. And then we'll transition into New York. So linear-wise, most traders always want to make a support and resistance. So they'll take the most common area that's touched. This has a touch, this has a break, retest, this becomes support for most traders. So that's a linear line. This has a touch through as well, and that's a linear line. So these are two London session levels, and then obviously we have the lowest point and the highest point of the London session. So in New York session, let's say we take whatever the high is of London, completely obliterate the level here, and this is where the current market is, right? For us, right, in the mentorship, we know about, our 936 consumer levels and such. So we have these levels to work with. Now that, again, entry is always linear. Flow is going to help us manage the risk based off the entry. Our entry, per se, doesn't mean that you're just going to buy when it breaks the level and just press the sell button, right? You can, and that could be a breakout trade, but how do you manage your risk along that way? So in this particular situation, this high and this high could be our order flow, where we're seeing price fail once, fail twice, and it comes down. But just because it failed twice doesn't mean it has to completely run a straight line down. I think most people have this FOMO idea of where they would never be able to get an entry on the same position, but it's better the further it goes because it gives you a chance for that flow to be remembered, right? So there's times where you feel like you really wanted this entry, so now you're chasing it down the line. But instead, understand there's multiple lines in the way. So if this drops down, this is a new low. This is where most of the time you're going to get your flow to happen because it needs to digest this line and this line. So this is a chance where we get our circular flow. So you get your reaction off of this smaller line. You get your reaction off of these lines. Now that you have your reactions, it looks like it's reclaiming. And this is where most people believe that there's a trend. This is, again, another linear mindset, right? So now this looks like a trend. We start adding things that makes us super confident in the idea that it should break a high and it should get up to this level. But in all reality, this is your circular experience for the moment. You hyperfixate on this area specifically. So it's here. This is our base. It touches this level and it falls out, right? Retest the same level and falls out again. This shows us that it's falling out of the trend. That could give you the idea of the reversal and stuff like that, but this specifically is your circular experience. This gives you the idea to say, if you're going to get in shorts, I can take my entry along this area, understanding that it is trapped inside of this dome. Now that price has entered it and showed you that it is inside of it, and that's your base. So your entries are here, and now you do have lines to deal with. So this is your next line, and you'll get another set of flow. And then you'll get another dome, which says, okay, you can keep this trade, or maybe even add more, right? And then you actually get your drop. That would be with circular. If you just did the trend line entry, right, based off of this trend, and it was linear, your entry would have had to been on here to see the market go up, and your stop loss would have had to been this last low. Right? So you get way more directional entries because of the circle. You didn't have to take buys here, but you did because break, retest, and hold the uptrend. When in reality, it showed you that it broke, it retested, and couldn't hold, and it's making a seller's dome and outside of the reversal, which could help you trade against the trend when you normally wouldn't, you know? So yeah, circular flow helps with giving you direction and risk management.
Do you prefer entering off the bases or the tops of the circular dome? Or do you
It's
have any preference?
yeah, my actual like flow that is profitable. But how many percent?
3.
Yeah, we should be good. All right. My actual flow of profitability would be highest point. All right. So if you're just talking about a dome itself, you have this guy, and like I could say, yeah, I love buying the bottom or I love buying the top, but it truly comes down to what level am I working with? Because again, you want linear and circular. So if I'm working with one of these, this is usually what separates imbalance highways. So there's an imbalance highway here, and there's an imbalance highway here. So if I have a dome that is falling through like this is the dome, but here is the highway, and it's the base of the dome. I don't want to necessarily buy the breakout of this because it's also the highway. So if that rejection happens, it's going to be very significant. So I can't buy that. So I would normally, if we're here and we're getting the dome, I would want to buy, if it sweeps, grab it, stop loss. Because now I know at least if I bought here, my stop loss is here. This is the entry, the take profit, quote unquote. Not that you want to take this small of a trade, but that it needs to get here before it gives our next reaction. So the closer I can get my entry to my stop loss area, the better. So I would normally buy the bottom of it if the highway is going to be on the top. And that way, if it gets above the highway, it will keep a fight on the highway. Worst case scenario, it can't keep it, then it's gonna stop me out. And it might even come with another dome to help me say, all right, I should probably get out and take the other side. If the highway's on the bottom and we're falling down with one of these, I'd love to buy the bottom of the dome as well, because it's coming with a highway sweep. This is the energy that it would get to remember that it needs to go up. So this is bottom of the dome because it comes with the level. This is bottom of the dome because it's being made, and the level up here that it's going to reject from is really high. Because if I buy the base here, I have to take all of this as a stop loss, which could be the means of like $500 when it could have just been $100. And those are buyer domes. So in those cases, yes, I would like to buy in this kind of direction. The only time I'm really buying a base is if I miss the sweep and it retests, and I know that this is the base and the dome has already been done and the highway's here. Because now I don't have to put my stop loss at the bottom of the dome. I can put my stop loss at the highway.